Hey folks, Dan Frio here with your market update for January 24th, 2025. So in today's topics, we're going to talk about the headlines news that came out yesterday. President Trump will demand interest rates to drop immediately. And then the headlines today is this: the Federal Reserve is likely to hold interest rates steady next week. What does it mean? So that's what we're going to talk about. That would be the main topic for today. But first off, let's get to today's economic news. And it is absolutely nothing. The only news that's coming in right now is manufacturing, PMI, and things like that. It basically came in kind of, I'll say, right on target through here. Existing home sales was supposed to be 4.19 million. It came in at 4.24, a little bit stronger there. That's really not moving the markets at all. So let's get over to the topics that we're going to talk about. Right through here, it says President Trump is demanding lower interest rates. Does he have the ability to do that? And what's the Federal Reserve's role in all this then? So I want to show you guys an interview right through here. This is a former Fed official. She is hawkish a lot of times. She's on the side of saying, rates always need to be higher. So just make that a note in the back of your mind. But she actually gives insight into this. And I did a video last night, and I'll put it right up through here, talking just about this when the news broke. So let's get her take on the market, and then when we come back, I'll show you exactly what the MBS market looks like in the background and how the other markets and indices are doing. So without further ado, let's get over to it.
President Trump taking aim at the Biden administration and the Federal Reserve in a speech yesterday to the World Economic Forum.
Over the past 4 years, our government racked up $8 trillion in wasteful deficit spending and inflicted nation-wrecking energy restrictions, crippling regulations, and hidden taxes like never before. The result is the worst inflation crisis in modern history and sky-high interest rates for our citizens. I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us.
Joining us right now to talk about Fed independence and, of course, next week's rate-setting meeting is former Kansas City Fed President Esther George. Esther, what did you think of the president's comments about that, about thinking that interest rates should come down? And by the way, he said to reporters later he knows better than the guy in charge.
Well, good morning, Becky. I think this posture is not a new one, and certainly not for the Fed, that there is a prodding to move rates lower. And in fact, the Fed, as you know, has been moving rates lower. There's been a significant drop in rates over the last few months. But to the point of what impact that has on the Fed, as many others have noted on this program, the Fed was designed to have some political insulation around this so that it can make its decisions consistent with the mandate that Congress gave it. And as you often hear the chairman say, in service to the American public.
You have said that you think it's a time for the Fed to be a little careful, just in terms of where they go next with the rate policy. I don't know that you were in favor of the cut the last go-around, were you?
Well, I probably would not have been in favor of making that cut. And again, because as we look at the disinflationary process that's been underway over the past months, it has seemed to stall out. And so while you haven't seen a reacceleration inflation, we also haven't seen the kind of movement down toward the Fed's target, I think, that would really call for continued rate cuts. And of course, following that December meeting, the Fed has acknowledged that and said they're going to be on hold for a bit. They're going to look at the data again before they make decisions about where to move rates.
Will that speech from President Trump yesterday make any difference, that he will demand that rates come down?
No.
How can you be so sure? I mean, we have heard every president basically in some way, shape, or form kind of hint that they would like lower rates. It certainly helps the economy to have lower rates. How does the Fed withstand the pressure?
Well, it is pressure in the sense, Becky, that the public hears this. The desire for lower rates, obviously, as you've seen, has implications for borrowers. But the Fed must follow its legislative mandate. Congress has told it that it is to bring prices to a low and stable level. And I think the Fed has defined that for itself as 2%. And so there is room to go. And I think in the long run, this institution has to think about those objectives rather than be swayed by outside commentary and political pressure that may come its way, as it has for its entire existence.
Yeah, Esther, I mean, it's probably worth emphasizing that even within the committee, the FOMC, it feels as if there's a pretty broad spectrum of views about whether the disinflation is sustainable and you can bank on it. Governor Waller last week seemed pretty confident that you still are going to have some of the kind of restraints on inflation coming through. Some of the more recent rental data might be helpful in that regard. So it seems as if there's a pretty healthy debate which would already exist no matter what was being said outside the Fed, simply because we're at that point of maybe getting closer to the neutral rate and having some mixed data.
Yeah, it's a very good point. And I think when you look just at where the individual committee members have outlined their forecast in the dot plot, you see that variation coming through because the economy has seen disinflation. We have seen that rate of inflation come down. But of course, the test for this committee is to achieve its target. And we're now going into the 5th year where inflation has continued to run above that target. And I think the stakes become higher then for the committee to really try to assess their level of confidence in whether that disinflationary trend is going to continue and over what time frame. Because at the end of the day, and you hear the committee say this often, they need long-term inflation expectations to be anchored. That has given them the space to be able to be patient here. So watching those carefully to make sure that continues to be the case is going to be important for them as they make decisions about their policy rate.
And Esther, really quickly, you know, economists have raised their expectations for inflation this year. How do you think the committee will talk about tariffs and immigration as potential drivers of inflation for the rest of the year? Or do they not factor them in until we actually see the policy?
Yeah, well, it's difficult to factor them in with any sense of confidence because we don't have clarity yet on how those will play out. I will tell you, though, just in the context that this committee is talking about these issues is quite different than the one I would have experienced in 2016 and 17, which is that was a time when growth was lower, inflation running below target. Today, they face a very different environment. So as they judge the nature of upside and downside risk to this economy, that's where I think the discussion about tariffs will be relevant to them.
Perfect. So that, sorry as that was so long, but they had all the relevancy there of why the president really doesn't control interest rates. And again, I posted a video just last night on all this information, so I'll post it right up through there. You're seeing the market reaction right now on the MBSs. So MBSs right now they're kind of all over the map. I don't really know what this big move right here was for, but right now we have the MBS market up 7. Again, that's really not going to change any rates, anything. It usually needs to be about 10 or more to really make rates either go down or up. Let's go to the CME Fed Watch tool. The Fed's meeting in 5 days, folks. So what are they going to do? They're going to do absolutely nothing. There's a 99.5% chance they're not going to do anything. Now, here's what the probability is going forward. This keeps moving a little bit. In May, there's a correlation here that keeps going back and forth. The next cut maybe in May that there's projecting through here. But if you go over to here, she mentioned the dot plot, and we talk about this ever so often. What happens is 4 times a year when the Federal Reserve meets, the members sit there and they put a dot on where they expect the federal funds rate to be. So right now, here's where the federal funds rate is at 4.25 to 4.5 right through there, and that's this range right here in 2024. But in 2025, here's what the expected is. They put all the dots in, and the majority of the members are putting in their dots right through here, so that means it's 3.75 to 4. So that means there's 50 basis points still to come out of this this year at some point. So when those cuts are going to begin, we just don't know. That's why we continue to watch this data. And so the reason why I watch the data and why I present it to you is my name is Dan Frio. I'm a licensed mortgage loan officer throughout the entire country. So if you're needing help looking to buy that first house or maybe that first investment property, I hope you reach out to me. The first thing you do, though, we have, when you're looking to buy that first house, one of the biggest things you need to get in line is some of the things that you can control. You really can't control your income. You can control your savings, maybe with a budget or something like that, but your credit scores are the biggest things that people just don't really know about. So to learn more about credit and credit scores, just go to creditscoresandmore.com. Pretty cool website out there to teach you a lot about this. But here's how you find out about me. So I'll give you the gist of what I do, because a lot of people don't really understand what I do. So I work at Surbank. Surbank's the number 10 largest mortgage servicer in the entire country. So we're huge. The nice thing about it is we also have the option to work with up to 40 different, not quite 40, but about 40 other lenders, and we can use their rates and their programs. So we can take the heavy lifting off of you. Think of our slogan for this year: one application, one credit pool, and we're going to shop your loan over 30 different lenders to make sure they have the products first. We got to get that product for you, because if they don't have the loan type you need, well, then everything else is irrelevant. And then we're here to guide you through the rest of the process. We're going to take basically you from application to keys in your hands, and we're going to guide you step by step by step. So if you want to work with me and my team, just reach out to us at therateupdate.com. You can put in your application right up through there. A lot of times we're like, just don't do that, because we'd rather have a consultation with you, and you probably would too. Let's get together. We can chat, make sure there's a good synergy there, make sure that we're having the products and the ability to work with you, and make sure you like dealing with us as well. Do we have the knowledge? Do we like what what you want to see? But what we strive for people to do is scroll down to the bottom of the website. Here's our 800 number. Give us a call. You'll go right to the front of the line. So our number is 844-775-5626. Or if you want to reach out to me personally, just email me at dan@therateupdate.com and leave your question and your name and phone number. I'd be more than happy to call you. If you just have a comment, you can leave that down below. But if you really, truly need my help, just shoot me an email, give us a call, or put in your application, and we'll be back with you right after you finish that application. So that's my report for this morning. Thanks so much for watching. God bless. Have a fantastic afternoon, and I'll be back later today to show you how all this mess ends for the day. Thanks for watching. See you later. Bye-bye.